Hello and welcome! In this video, we will discover how to invest your money in 2020 and 2021. 2020 not only marked the onset of a brand new decade, but also the beginning of a very peculiar financial phase. According to economists and financial gurus, 2020 will be one of the golden years of the 21st century for investors despite the upcoming recession. Unlike other years, 2020 to 2021 is impacted by several factors, such as the tug-of-war going in the Middle East, China's emergence as a global superpower, and the spread of COVID-19, which has disrupted the economy of almost every nation in the world. People claim 2020 as one of the most unpredictable fiscal years because of sudden events. We've not even completed a quarter, and we have already witnessed pivotal fluctuations in the stock markets and prices of commodities. Whether it is real estate, cryptocurrency, technology, healthcare, or trading, economists have deemed 2020 the best time to invest your money for long-term returns. How is 2020 different from other years in financial terms? Well, as discussed previously, there are several factors which have led to many economic implications. Here are a few reasons which have impacted the global economy and have attracted the attention of investors and business tycoons. USA-Iran conflict. The rivalry between the USA and Iran has led to tensions in the Gulf, which can be seen in the prices of oil barrels. It has direct correlation with prices of fiat currencies and the economy of nations dependent on petroleum. COVID-19. The spread of COVID-19 pandemic, especially after February 2020, has resulted in lockdown in many countries. Many nations, including economic giants such as the USA, India, China, Iran, UK, France, etc., have imposed travel bans and restrictions on imports. It has changed the demand-supply ratio, which has given rise to many businesses and investment opportunities. Emergence of China as a superpower. The world has observed the sudden rise of the dragon in every field. China has developed itself in technology, exports, electronic devices, and cheap labor. Furthermore, it has harnessed its strategic location, human resources, and landmass. Many investors across the globe have bought their shares in Chinese companies, which have turned the table. Investors and business enthusiasts always look out for these types of opportunities so that they can put in their money in assets when their prices are towards a trough. Now, let's take a look at the investment options in 2020 to 2021 that could make you fortunes. How to invest your money in 2020-2021? Given in this video are some domains in which you can invest money to reap long-term benefits. Just before we dive in, make sure you subscribe to the channel and don't forget to download your free book on financial freedom by clicking on the link in the description below. 1. Stocks. Stock market is an evergreen destination for investors and business giants. This is because no matter what, the market undergoes fluctuations every now and then. Moreover, in 2020, the stock market is showing disruption because of recession and COVID-19 pandemic. Share prices of top-notch companies are crashing due to travel restrictions and lockdown. Therefore, this is an ideal time for investors to collect valuable shares at the lowest prices. A recession is observed in every decade, and this time it has arrived in 2020. Furthermore, monetary significance of the stock market has been on a rise since the last couple of decades. People who took a risk and purchased promising shares in the 2008-2009 recession have multiplied their investments. That is why consultants are advising their clientele to put a chunk of their money into stocks in 2020 so that you can sell them at higher prices 3 to 4 years down the line. However, one should not blindly rush into the market. Even though prices of share do rise after the market stabilizes, there are companies which are driven towards bankruptcy due to recession. That is why it's extremely important to have intricate knowledge about the ongoing local or global scenarios and then invest money accordingly. According to current trends, it is advisable to incline towards pharma companies to be on the safer side. But if you have an appetite for risk, then you can go for corporate stocks, which might return you high rewards. Experts have suggested that the bull market has been showing favorable performances in its 11th year. According to the S&P 500 index, the market showed positivity for 29% in 2019. Some people might argue that one must take money out of the market because of this spike. It is wiser to retain, if not increase, stock holdings for selected companies. Many people and investors have associated the inevitable market crash with high risk. However, as an investor, you should always consider that the market will get back on track. According to various studies, an average recession lasts for 11 months, and then the market becomes stable. Share market is bound to stabilize by 2021, and the prices of shares will gradually increase. Some highly promising companies in the stock market which are ideal for investors are Amazon, Visa, Chipotle, Netflix, and Planet Fitness. 2. Gold. According to predictions by economists, the price of gold will rise in the global marketplace after 2021. Now is the right time to shower your investments in return of gold. Due to the COVID-19 pandemic, only 5 assets showed positive growth. Gold was one of those 5 major assets among 2 fiat currencies and a couple of safe havens. Gold is giving hope to many investors because of dropping interest rates and an inactive economy. If you don't want to dive into the stock market because of risk factors, then you can definitely insulate the portfolio by investing in gold. Unlike the first quarter of 2020, it seems that the upcoming months will be comparatively more secure and stable for the investors to dive in the market. Generally, it is observed that when the dollar is contained and runs in a long-term range, performance of gold in the market becomes strong from the perspective of investors. Interest rates of banks are tending towards zero, which is a positive sign towards making investment in gold. As of now, economists are asserting that it will be very difficult to achieve normal growth rates in the coming few months. And according to previous trends, gold performs better when there's no expectation of financial growth. Another point that you should consider is that gold is one of those assets which don't produce any income. When this fact is accompanied by downfalling interest rates, people tend to sell gold and move towards other investment options. This leads to price drops, and you can harness this situation to your best. Collapsing manufacturing surveys and negligible hope towards higher growth rates will definitely enhance gold's performance in the long run. Unlike stocks, it won't multiply your money, but will surely give you stable long-term returns. As an investor, if you don't want to risk your hard-earned money, then you must consider gold as one of your potential investment options. You can invest in gold and wait till it reaches the peak after 2021. After that, it is up to you whether you want to reap your investment or keep it for a longer run. 3. Airlines and Aviation Industry. This investment alternative is bound to have good returns in the long run. Moreover, it is independent of the global markets, which places it on the safer side. Till now, investing in the airline industry was considered to be a matter of business tycoons. However, due to the spread of coronavirus, it caught the attention of mainstream media. Travel bans and restrictions on flights have resulted in a steep drop in the industry, which can be seen in their stocks, mass layoffs, and reduction in market retail price of the auto parts. Due to COVID-19, almost every airline has halted its operations currently to adhere to travel restrictions. Statistics show that the nations which contribute almost 98% of the total revenue generated by the industry have banned flights. Moreover, the current passenger traffic is almost 40% lesser than the previous years. In such a situation, aviation companies have been facing financial trouble in keeping up with their employees and maintenance. As a result, they're resizing themselves and are reducing the cost of associated things such as supply chain, engineering and design, aviation softwares, etc. After countries lift the travel bans, this billion-dollar industry will stand again. Furthermore, people will travel more after traveling becomes normal, which will exponentially increase the revenue and valuation of aviation companies. Companies will start upgrading their fleets, softwares, simulation strategies, and might as well adapt new supply chain techniques. If you've a considerable amount of funds for investments, then you must definitely consider putting your money in this industry. Apart from holding stocks, one can fund emerging companies which specialize in manufacturing parts of airplanes, softwares, crunching data, R&D, etc. As per the predictions of veterans, stocks of aviation companies will double themselves as compared to current value, which will be an indication of growth. Apart from this, stability in the petroleum sector will also have a positive influence on this industry. Airlines rarely go through such a situation, which is a one-of-a-kind investment opportunity. If you've sufficient funds to invest in these companies or related firms, then one can put in the money. In other cases, one can always purchase stocks, which is a safer and sure bet. 4. Real estate. Real estate and real estate investment trusts, or REIT, are other ways of investing your money in 2020 to 2021. No matter what the situation, real estate has always been amongst the top choices of investors. This year is special for the real estate sector because of the socio-economic changes occurring across the globe. Whether it is urbanization of Chinese and Indian cities, changing demographics of European Union, or conventional growth of the sector in North America, real estate is suitable for long-term players. In contrast to bonds, real estate's lower interest rates and hefty capital make it one of the best long-term investment alternatives. According to research conducted by PwC, the CAGR of this sector has increased to $45.3 trillion in 2020 as compared to just $29 trillion in 2012. This drastic change is influenced by a sudden spike in the developing nations, specifically in the Asia-Pacific region. A similar growth pattern will be witnessed in this decade. Moreover, real estate tycoons assert that stabilization and gradual economic growth after recession will act as a catalyst for this sector. Instead of residential property, people are investing in office spaces because of constant and smooth rental income. Even if you don't want to dive directly into property business, you can always get your share in investment trusts. Even though real estate is considered as one of the safest sectors when it comes to investments and financial planning, investment trusts, or RIET, eradicate even this minimal risk. They offer regular dividends and also make you a property owner. Unlike investing directly, you don't need to worry about collecting rent and regular maintenance. Besides this, there's a rapid increase in urbanization and social migrations in nations such as China, India, Nordic countries, and South American countries. Cities in developing countries are going to become the hotspots of residential and commercial constructions. It is the right time to gather your funds and invest in the real estate to reap secure and long-term benefits. 5. Invest in the Brazilian market. Due to gradual building up of recession and its amplification because of COVID-19, almost every market has been hit hard. However, of all the major stock markets, Brazilian economy saw a major setback due to implications of this pandemic. This downfall seems obvious to some economists because of Brazil's heavy reliance on international tourism and exports. Another reason for crashing markets is that Brazil's economy was dependent on energy-oriented nations and political turbulence. Keeping aside this economic scenario, Brazilian government has introduced many economic reforms which are welcoming privatization with open arms. If one has the guts to take risks, then Brazil's economy is one of the most rewarding economies in the world. Despite political turbulence and dependence on commodities, exports and natural resources make it hotspots for investors. Before discussing how to invest in Brazil, it is essential for the potential investors to keep in mind that this market is riskier even after gaining high rewards. You can invest in the exchange-traded funds or ETFs listed by the US or Brazilian exchange. iShares MSCI Brazil Index ETF, Global X Brazil Consumer, and VanEck Vectors Brazil Small Cap Index are well-known ETFs among the investors. This can be accomplished by purchasing American Depository Receipts, or ADRs, for putting your money on Brazilian stocks. You can invest in Brazil's most marketable ADRs like Vale SA, Petróleo Brasileiro SA, or Itaú Unibanco Holding SA. Moreover, you can explore more options. 6. Cryptocurrencies. Investing in cryptocurrencies might seem unconventional from the perspective of a traditional investor, but it is becoming a highly rewarding investment trend. This is mainly because of increased computation power and technology's penetration in the lives of common people. Cryptocurrencies are relatively new and hence they are quite volatile, which is seen in sudden fluctuations in the price of tokens, especially in the case of Bitcoin, Ethereum, Ripple, and Litecoin. Even though there was a devaluation in the prices of cryptocurrencies was witnessed last year, stronger tokens remain unaffected. You can invest in cryptocurrencies like Bitcoin, Litecoin, Ethereum, Tether, and Ripple because of high market caps and liquidity. Due to their independence on global scenarios, cryptocurrencies are attracting many investors and tech enthusiasts. If you're looking for a short-term investment option, then cryptocurrency is the thing for you. Here's a trick for investing in cryptocurrencies. Never put all your investment on one token. In layman's terms, you should distribute it in various coins. For instance, even if the token of price A goes crashing down, still your money will be on a safer side as you'd have invested in other tokens too. Moreover, you should not follow just one data source to put your hard-earned money into such a volatile investment option. If you don't want professional consultancy, you can harness the internet to examine the current marketplace and dive into it when you feel that you might gain returns in the future. Will these investments yield profits? These were some of the ways which have high chances of giving you good returns. Some are suitable for short-term, while others are long-term investment opportunities. The year 2020 to 2021 is very different from others because of the global turbulence right in the first quarter. The US-Iran conflict, US-China trade war, and COVID-19 pandemic has shaken the global economy and dismantled conventional trading methodologies. However, a positive side to the economic disruption is the price drops of various stocks and assets, which can be utilized to the fullest when the market stabilizes itself again. People are panicking because of recession, which is compelling them to draw their money out of industries and markets. Therefore, this is a golden opportunity for investors to dive in and make the best use of the current situation. The only thing an investor should keep in mind is that he or she should be selective in the domains which will minimize the risks. The market is bound to rise again in 2021, which will show good returns on investments made during 2020. If you enjoyed this video, please like, share, comment, and especially subscribe to the channel. You're also free to receive the new book, 5 Steps to Reach Financial Freedom, by clicking on the link in the description below the video.